Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow, so just do it! Make your dreams come true! Just do it! Some people dream of success while you're gonna wake up and work hard at it. Nothing is impossible. You should get to the point where anyone else would quit, and you're not gonna stop there. No, what are you waiting for? Do it! Just do it! Yes, you can! Just do it! If you're tired of starting over, stop giving up.
Apple tomorrow, rockets damn straight. I agree with that one. Good afternoon, everybody. How's it going? Good afternoon. It is 1 p.m. post. I always say post. I don't know why I do that. Pacific Standard Time, everybody. It is September the 7th. It is Monday. The markets are closed for Labor Day, correct? And but you know what? That doesn't stop us from having a good time together, guys. That is right. We are going to still get the Stock family together here in the chat. We're still going to do our pop quizzes. We're still going to do everything we can to make sure we learn something today and that we can just still gather here and still knock some ideas together. And so what we're going to do is do just that. So yeah, how's it going? All right. We are going to be finding out what is rocketing today, tomorrow, but not just really that. It's more of just learning today is what we're going to be figuring out. So yeah, how's everyone's weekend going? All right, guys, let's go ahead and get all together in our chat best we can. We're gonna go ahead, let's see, refresh that chat. Multi-stream, by the way, guys. See, all is well, futures up in the green. Nasdaq is about to break out to upside. See, that's kind of what I felt like, especially with a 3-day weekend to separate our close in the Friday of what it was practically a 2.5-day drop. So like, yeah, I really believe we're gonna open up to a green week all the way through. If you are fortunate enough to still be holding some things at that low of a price, I believe it's not going to be there long. People are going to say, like, you know what, it's green. These are like grab prices now because we've all seen what they come up to. Like, so yeah, I can't wait to see what it'll go. But yeah, guys, let's go ahead and see what we can get going on here. Oh
no, where did I put them?
You got your list on your side, you know what?
I do have my list on my side, but I had certain things. Remember, I had them on my phone that I said I wanted to talk about?
Yeah.
I'm not saying
All right. Well, in the meantime, we're going to go ahead and just start talking about, like, he's talking about Apple right here. So I'm just going to, like, look up some Apple news in the meantime while we get this started. So yeah, I'm going to go ahead and bring us on over. What is up, guys? All right. How's it going? This is Stock Talk 2020. I am Prescott.
I'm Jessica.
And this is what we do. We are going to go ahead and get this started. Like, we already have you talking about Apple out there, about how well it's going to break off into the morning. And I believe it's going to do just that. And like the majority of the market, like, kind of felt that the whole way through. Surprised Novin fell so far down. But like I said, after the 2-3 day drop, like, I'm pretty sure people were just starting to pull out of things that they felt weren't like necessary to really keep. Hey, thank you for liking the stream, man, because seriously, all the likes, the love, all the reactions you can put on these videos, the shares, especially the shares and stars, they get you in on the raffle that happens actually today. So we're gonna have a $25 Amazon gift card giveaway. Hopefully we can get people up in here. Normally we do this a little earlier in the day, so people may not be aware that we're on right now, so it may just take a good moment until people start gathering up. But in the meantime, we're just going to start talking about what we can be learning as of late. We got some some patterns that we can be looking out for. We're going to talk about some scanners in the meantime, seeing about like what kind of scanner options are out there and what scanners are. and just going from there, guys. So yeah, Hun, what can we do to get this started? Well, oh yeah, actually, I did say I was gonna look up a little bit of that Apple News, so let me go ahead and do that real fast. Let's see. What I like to do is look up that news. I put in recent, past hour. Fairfield Orchard, looking at safe ways to host marine apple. Okay, that's just not all right. That's just apple. All right, let me look at AAPL. There we go. Stock. Nothing in the last hour. How about 24? Wouldn't have been your best tech investment in 2015 despite 300. Well, yeah, but still, I get like that's hindsight stuff. Is it too late to buy the best performing stocks? No, especially after it dropped like that. These are becoming the best opportune times. If anything, it's like closing towards it. Should you buy the dip? I think so. On Kodak, I don't know if we should start looking at Kodak just yet, but if everything dipped on that Friday, like I actually wonder, did Kodak? Like I'm getting a little distracted, but this is more of, yeah, bam, it went back up to over 10, dropped back again. Hell, you know what? Kodak might actually be a grab going into, like, so much of it. Yeah, all Friday didn't do anything. It stayed as low as 612. Look at that. We're gonna see Kodak pop after Thursday, Friday's drop.
I don't trust them. They just had a whole bunch of issues with fraud.
Kodak? Oh, well, that wasn't Kodak's issue with fraud. That was like, yeah, like no matter what, they would be doing the whole ingredients for it. I don't think they were part of the fraud. I think other people who knew what they were going to be doing partook in like some type of insider trading kind of thing like that. I don't think Kodak was the company to do the inside trading. I think a lot of people started buying Kodak. That was not they didn't have anything to do with Kodak, but someone gave them a tip to buy Kodak before that news was released. It's like that's what the issue is. I don't think Kodak is so much the issue.
$765 million federal loan.
Yeah, it's on pause.
Okay.
Until the allegations of just what we were just saying, inside trading.
Okay.
Yeah, I don't think Kodak themselves is insider trading to themselves. Like the CEOs are like in on something, but I believe like somehow word got out a lot sooner than it should have. At least by a few days or anything. All right, but yeah, let's keep this as a learning day. What do we got to look up, Hun?
So I was looking up this thing and it was talking about stocks to get when the market crashes, and so now might be the time to look at them. And so there were a couple of them that made a lot of sense. Like there's Teladoc Health, and that is either TDoc or there's a bunch of them. There's TDoc, there is Livongo Health. It's any of the online able to see your doctor.
Ooh, especially look how much that dropped after that drop.
Yes, and those are going to be huge too for who knows how long to come, because for one, honestly, it's easier on me. Like a lot of times, like I don't even want to go to the doctor. Like I know what's wrong with me, and like I just want to go in there and be like, hey, like this is what's wrong with me. I want to get in, get out. I can now do it from home. And especially with the pandemic going on, other people are able to do that as well. And even like counseling appointments you can do online now, which again, like you're sitting in a room with another person. They're not physically touching you. They're not anything. They're just listening to you. Is there an issue with doing it online? I don't think so. And
I would totally believe that online is the future way of doing any kind of TDoc. Exactly. Yep.
And so those stocks are going to go up like crazy. Another one that is good to invest in if the markets crash would be Visa. And
those are great price targets right there. Exactly that. I
Visa,
believe,
it's not going away. Visa's been here forever. Visa? No, I'm saying there's three stocks.
Yeah, there's a Teladoc, which we believe
TDoc.
250, 260, without a doubt, it's going to go back up to those earnings right there. You say 240 to 260, like great range right there. Oh, by the way, ask about our league right there. We have about 2 to 3 slots open, so just ask about that if you're into fantasy football. By the way, if you're new to this, hit follow and like on the page right now, because that's how you start getting in on our stuff. Sorry, honey, I'm trying to get you in on the frame. Let's scoot a little this way. All right. But yeah, so we got TDoc.
There's TDoc, Livongo,
LVGO. And then, oh my gosh, just the same. Yeah, it dipped those last 2-3 days, even found its grab at 126. Going to easily find itself back above 145. Because like it's going to, like, especially at least for a moment during this week, because it's going to be, bam, everyone's jumping on it this Tuesday. And so Tuesday, Wednesday, you might be seeing spikes. It'll come back down a little bit. for those little gains for the next few days to catch up to the spike that was on the first day. But I believe there's going to be a lot of action coming on when the market opens up. Going to see. Look at the S&P 500 6-month chart, and the Dow, Nasdaq, all stocks are about to pop. I'm believing it. Like, we're going to look at that in just a moment. I could see it. So we got the Livongo here doing the exact same thing. Took that dip. It's going to be a great grab. And that last one, you said Visa? Mm-hmm. Now Visa, I'm familiar with Visa as a credit card company. What Visa are we referring to? Yeah?
Credit card company.
Okay. Oh, okay. For some reason, I thought these were all like
these are stocks that won't go away.
Okay, perfect. And then Visa, and of course, there's going to be dips in here and whatnot because what would Visa's thing be?
B.
Okay.
So listen to this. Another wise idea when the stock market crashes is to buy into payment facilitator Visa. As you can imagine, the COVID-19 pandemic hurt consumer spending and thrust the U.S. economy into its first recession in 11 years. That's bound to reduce the amount of money that consumers are spending, ultimately hurting the merchant fees that payments like facilitators collect. But here's another way to think about this data. During the Great Recession, Visa saw only 1 year-on-year decline, 2009, in terms of gross dollar value transversing its payment network. Between 2009 and 2018, Visa's share of the U.S. credit card market by purchase volume soared by more than 9% points to 53%, and the amount of purchase volume on its network more than doubled from $764 billion to $1.96 trillion. Visa is a preferred payment processor in the #1 economy in the world, which just so happens to be reliant on consumption. And so, like I said, like, this won't go away, and not only will it not go away, but it's not that bad. Like, it had, even when it was getting bad, the stock wasn't doing bad. What does that say? Which stocks took the biggest hits are the ones I'm looking for.
No, exactly. Anything that took those 2-day dips, those 3-day dips, and that Thursday, Friday right there, is going to come right back. Like, this is that opportune moment, especially if people were not in the stock market for that dip, that hit. Like, this is money opportunity. I completely agree with you. So right now, you're probably looking for what's the biggest return to come back to for what? One of them would easily, like you were looking at it, Apple, it's at 120 right now. It easily can get back to 135, and not even just that, shoot up to 150. Another one, Tesla, especially after the dip it took Friday. It was ridiculous, the dip it took. Did you catch what I said on accident there?
You did. I ignored it. I was gonna let it roll.
It was a "that's what she said" moment for sure.
That's true.
All right, but yeah,
hey Ray,
let's look at Tesla here. Hey Ray, hey, welcome over to the show, buddy. Thank you for making it in.
Hi Christopher.
Chris, hey, hell yeah, guys! Remember, guys,
SYRS is on one of those drops.
Participate right now in the chat. Let us know. We are looking for these big drops, guys. So yeah, Tesla. Oh, and it's scary too. I get it, but from where Tesla already dropped to again it dropped. Like, it hit 538. It has a price target of 550, and that is a believable price target because I say it like that because we've seen it hit every price target ever, and quick too. Not even just that, but it took such a dip. 390 rate grabs on this, and I like when it comes to biggest returns, I think Tesla might be it. I don't know how much bigger of a drop it could. Maybe 375 if it were to go any lower, but I can't believe it's staying any lower than that.
You should check out Amazon.
Check out Amazon? Oh,
yes. The reason why I'm curious, because I want to see how this affects anything, is Amazon just deleted 20,000 product ratings after an investigation highlighted paid for reviews.
Wait, they deleted paid for reviews?
Amazon deleted 20,000 product ratings after an investigation highlighted paid for reviews.
Wow. So they went through a lot of reviews and making it look good before this review happens.
No, like let's say I have a company and I just started paying people to give me reviews. I'm like, hey, I'll give you $50 if you give me a review.
Let me see that.
That's what that's saying, baby. What? Amazon deleted 20,000 product review ratings.
Paid for reviews.
Yes.
Ooh, okay, so there's something being highlighted for paid for reviews. So after this thing came out, they deleted so many, so they were paying people to leave reviews to a certain degree.
Mm-hmm. And not Amazon per se. Amazon was the one deleting them. People have their own company on Amazon.
Oh, that is actually true. You're right.
Yeah,
it wouldn't be Amazon.
It's those people.
So they're cracking down on people giving fake reviews, practically bumping up. Yeah. Okay. Good.
Yeah.
right?
Yeah.
So let's see how that affected that. Well, Amazon, oh my gosh. Talking about grabs. You ready for this one, guys?
Yep.
Talking about grabs. So Amazon, very healthy. It was on its way up to 3,500 past. I'm sorry, it was past 3,500. I say Amazon is a $4,000 stock, hands down by the end of the year. Hands down, $4,000 stock. It's like it gained 5. Yeah, it's got what 2 months left, 3, 4. Yeah, easily. So right now Amazon is at 32.50. It took 2 dips after being at 35.52. So it lost $300. $300 on this dip.
So
now,
you know what? Zach said people are giving away products for good reviews. You know what they should do? Like if they want to give away their products, like I get that. But what they should do is they should give away the product and say
for honest reviews.
For an honest review, yes.
Well, that's what.
Like I don't care if it's good, bad. Just like be honest. Because we were doing reviews too. I had to shut mine down because we were getting fake reviews, fake negative reviews, unfortunately. But I'm gonna end up putting it back up. But at one point we were, and so I kind of went off on a tangent. I'm sorry. Reviews. I'm so sorry. I got distracted.
I'm gonna pull you this way a little bit, honey. Yeah?
Oh,
is that okay?
Yeah. Yes.
Then I'm gonna do. Yeah.
Let's see. Oh, products. Wait, we were doing reviews, and when we were doing reviews, though, I asked people, you know, like, hey, would you mind giving us a review? But I was really clear when I said that. I would always say like, I don't care what you say. Just be honest. Whatever you do, be honest. And that's what it should be about. Because if you have a good product or you know, it's so funny. Oh, you saw it there. Okay, you know, if you have a good product or a good service, like you're gonna get good reviews, but it shouldn't be fake reviews. That's all.
Dude, Facebook's gonna pop too. Facebook is easily a $300 minimum. It's at $280. Those are all around $281. Like Apple, like I can't wait. Dude, it should be a green Tuesday for like certain. It'll be kind of like one of those things we'll sell as things pop by afternoon. Thing like, well, some of them might even pop early, but it's definitely gonna be one of those. Have a sell limit or a limit sell, and just wait for those. It's because it's gonna hit those predicted like pops and very well. So, and like it's not gonna like all of them are not gonna rocket back to what they were, but they'll definitely have a good pop. So you could get lower losses, minimize losses while you get back on them while they're low. And boom, day trades are coming.
Yeah, day trades are coming back. They start over tomorrow, yeah?
Yes.
Yes.
So yes, Amazon looking great. Let me look at Etsy, right? ETSY. Just like that. All right, Etsy took in what was it for the day? 144 hit in the past. 130, 123, 118. So that's like a $12. That's gonna be like a $20 gain or something like that because that's gonna really catch up. It shot up at the end. No, people already knew it was at 112 at the end of Friday. They knew to grab it. They knew all the potential. Like no matter what kind of hit the day took, Etsy is one of those that are promised to come right back up.
Do you think with Wednesday, do you think it'll start green or red?
You mean Tuesday? Tuesday will start open?
I don't. He said Wednesday.
Maybe
he meant Tuesday.
How do I think Wednesday will be after Tuesday's open? I think. I'm hoping for a green week in general. I'm pretty sure we're all gonna be blown away, at least in tech. And when it comes to tech and like energy efficient stocks and like you know what is it? Damn it! What is that C stock we need to keep track of?
C stock.
There's the one about the sea waves being put into use with the energy. This is Liana stock, I believe she shares with us.
I'll have to look into it.
Yeah, I'm not trying to remember what it was, but darn it. But yeah, definitely wanted to have it in there. There's like the windmill stock that...
WYDD.
WYDD?
I'm pretty sure that's it.
The only one. Let's see if that... I don't think that one took any kind of hit.
Probably not.
No. Something close to this though. WYND?
Yes, maybe.
Windham?
That doesn't sound right.
Windham Destination. Well,
I'll find it. It's not a big deal. It's a really good.
Ooh, Dude, look at the gain though in this one. Regardless of what, we got to double check which one this is.
Okay.
But great, let me double check. Even longer than a year. 3 years.
I'm really sad. Like,
Beautiful.
I was totally prepared for today. Like, I was really excited and I worked really hard.
That could be a 20% gain.
I found cheat sheets that I wanted to show people on like when to buy and sell with the candlesticks. I found like a beautiful one. It's gone. I had it on my phone and I must have accidentally shut it.
Oh, you're talking about swing trades for Tuesday to Wednesday.
And I can't find it at all. And I'm sad because like
I still feel like as long as we keep the learning coming in the conversation, there's going to be no loss.
well, no, I know, but what I'm saying is like I'm sad because I can't find the one that I found, and it was like a really good one. Like
Really
I felt
in-depth.
would be like super helpful.
But look how healthy this. This is a 3 year. This is 3 years worth. Look how secure this is. This is Windham, guys. Now this is an awesome thing. Like if you don't know how to read candlesticks and just be able to just throw on
That's what I was trying to get so that they could read
like a type of reading, yes. So yeah, guys, like this right here is a beautiful graph because this is 3 years worth, and this is like so. What you can see is back in just like 2018, the beginning of 2018, so 2 years ago, it's like, oh, this is going to be the year of wind technology, right? And it was great gains for 2 years straight. Big loss, of course. This all happened with the fail of everything. So it went from 53 down to $13. It went down by like it would have sucked, of course, to be on it for the drop, but bam, grab, and in what in about 6 months, it's already almost tripled. So like, damn, if you put $10,000, you had 30,000 just like that, just by waiting 5 months. And then, but it's at 31, and this can easily get back up to like 45, 40 in the next like month. It wants to gain, and then and this, like I said, this should be Wind Technologies.
Okay.
Oh, and not even just that. Look at this. It had its drop, great gains and hold. Look at this, honey.
Mm-hmm.
And then it's gonna open up down at 31.01 when it has the capacity to be at 31.50. So that's a 50% drop. So that's going to be a grab, and then next thing you know, right at open, it's going to go pop. So that's going to be a quick little pop, and it's not going to be right there for a minute.
Okay,
Oh,
so
watching
I think that
SYRS. Okay.
will you click on the link that I just put on there? I want to see if it actually works. Oh, perfect. It is.
Yeah? Okay,
Okay,
perfect.
so I found a good example of a cheat sheet that was awesome because we can talk about like when to buy, when to sell or whatever, but like people need to visually see it. And so it was kind of something like this where it says like, okay, this is your signal to buy. Oh, signal to sell. All right, close sell.
Close. So like this is saying after this, you don't really want to touch it after it does this because there is no gain here. There.
Yeah. So see, that was one thing that I was like, all right, I want something like that so that people can see it. And I'm going to get that added to our...
Oh, is that unit still there? We sell the units, right? Yeah.
Yeah, I'm going to add it to our units. And then I also wanted to go over scanners today. Are scanners worth it?
Let's see, SYRS. Go ahead and get the scanner data up there. Oh, ooh. Good dip on the SYRS. Let's see here and put it out for a 10-day. Ooh, big dip for the 2 days, of course. It was kind of bare before that, but with a dip like this, it may correct itself to 1175, but let's look at a bigger 20-day. It may dip to 950. No, 980. It already did, actually.
Now, when I talk about stock scanners, I want a stock scanner to give me an idea. That's it. Like, I understand that I still need to do my due diligence. I need to look into the stock. I need to look at the candlesticks, but I need something to like be like, hey, look at this area, you know? And so I thought about looking into scanners, and I found a list of scanners that are supposed to be good. There is Trading Ideas, Trading View, Stock Rover, Finviz, EC2000, Atom Finance, TD Ameritrade, and Zacks and Nasdaq Screener. Can you pull up your Yahoo on your screen?
Yahoo!
Because go to a different one, baby. You just got off that.
Off what?
Okay.
Facebook?
Yeah, like pull up another screen.
Do I need to stay on Facebook?
What? I thought you stayed on it so that you could see the words or whatever. Okay, so now go to finance.
Finance.
Okay, so in the finance area, there is supposed to be a screeners. Oh, I apologize. They're right there. Screeners. And you can look up index screeners, future screeners. Hey, Zach.
Zach, how's it going?
I'm having an awesome holiday.
Woot woot.
I'm just learning and stuff. Hopefully Philomena gets on. Because, Philomena, this is going to be your jam. Actually, I'm going to text her real quick.
I'm going to click. Six Flags Entertainment Corporation. Look at this. All I did was type, I click was small capital gainers. And Shiloh Industries, Transocean, Groupon. Oh, wait. No.
What?
Is that actually a jump Groupon had? No. Let me see what Groupon's price is. What? No way.
No way what?
They must have had a split. There must have been, yeah. Okay, there was a split. Okay, there was a moment where Groupon was like a $2 stock, $3 stock, and now I'm seeing it at 33. There was a split at one point. Okay.
Okay, so let's take a quick peek at this scanner.
Scanner. This one.
Yes. Okay, so it gives.
This one.
What happened?
Like, this is the main scanner page. Like all I did was click small capital gainers.
Okay.
And
so
this is where we are from here. Yeah.
So okay, it shows you the symbol, the name of the company. What is intraday?
Intraday price. I think it's just saying. Let's see. What's the price of the? Maybe what it closed at.
Okay. Well.
Intraday. Yeah. Let's figure out what that definition is.
Okay. So, but anyway, it gives you a list of.
I'm gonna pull up this idea.
Then you do your own D&D at that point. But I think that I'm gonna start with the Yahoo.
The Yahoo scanner
and go from there and see what kind of benefits it gives me.
Incurring within 1 day. Intraday.
Oh, so day trading.
So it's just saying, well, what's that price within that day?
Okay, that makes sense. But the question is are scanners good or are they bad?
Ooh, look at this 52-week range kind of a thing here. So what I would possibly do when looking at this is find things on the low 52-week range. So like this 26 cent one within the last 52 weeks was $4.60. Shiloh Industries. That's Shiloh Inns, right? Like the hotels?
Well, we have to double check because sometimes it's not what you think it is.
Oh, it's true. And so let's see what information we get just by opening it up. Let's see, do we get any kind of...
Oh, thank you, Zach.
There is a company outlook that's locked. Let's see. Leading indicators. But the summary does involve near fair value, of course. It's saying the market capital, 17 million, or dates. Let's see.
What do you think, Zach? Is this something that you would think about using? Would you want to use it?
Why does it say ex-dividend date is 2012?
Because maybe that's the last time it had one?
Oh, they may have stopped since then, you're right. Okay, man who predicted rise of Amazon has new ads. 5 days ago, Shiloh Industries receives court approval of first day motions to support business operations. Okay.
Okay, so something that I do like about this is I like the fact that it, like all the information it gives you. I feel like it really gives you like everything that you would need.
Gives you a phone number. Where they are, their employees are all under profile. Under profile, you're gonna find titles of their names, who the VPs are.
Okay.
All right, where it's at now. Maps, description. Here we are. Together, it's with its subsidiaries, designs, engineers, and manufacturers lightweight technologies for the automotive and commercial vehicle markets worldwide. Nothing to do with Shiloh hotels. I thought Shiloh Inn, right? That's a thing. Did I even pronounce this correct? Shiloh. Shiloh, okay. Worldwide produces components primarily for body structures, chassis, and propulsion systems. propulsion systems. The company offers solutions and materials including aluminum, magnesium, steel, high-strength steel alloys, and acoustic laminates, body structures components such as the shock towers, instrument panels, cross car beams, torque boxes. All right, they have a lot of things when it comes to. All right, yeah, they. Now, it sounds like a lot of good like car things, but like who do they do business with?
Shiloh Industries. It's auto parts.
Auto parts. All right.
So this is not the hotel.
Yeah, no, exact. Yeah.
So here's.
So who does business with Shiloh? SHLO. What kind of shareholders owns? Okay, Shiloh Industries embrace diversity. See that like this is just kind of like this just turned it into like almost step for step what you would do for DD almost. But I like the information that scanner's showing there on the Yahoo.
But that's what I'm saying. That's my point. Is the scanner is just to get the ticker, and then you're doing what you're supposed to do. This is the next step.
Mm-hmm. And yeah, and see like yeah, what kind of news they would have next, who they do business with, who has their car parts purchased from them.
Oh, get your graph off the screen.
Oh,
they can't
so
see what
son
you're
of a gun.
I'm so sorry, guys. Like we were doing it this way just so you guys could specifically see. So we'll start over just a hair.
Yeah. So yeah, we were just mainly here at the Yahoo showing how you can go to Yahoo, hit screeners, and then from there you have this full list of things, and then like small cap gainers is a great one to be looking at. There's top mutual funds, portfolio anchors, most active. So let's see.
Oh,
so yeah, you can see like what has the most volume going on. Let's see, Apple right at the top, Tesla, Neo, yep.
And
this
is exactly right. Also, what Zach's saying, he's saying that he likes the upcoming dividends better. He thinks it's more useful
because people do jump onto those just for dividends.
Wait a second, or an option scanner, and I like the idea of an option scanners. There's a bunch of different kind of scanners. There's options, day trades. There's a bunch, but I like option scanners too. I want to look at options, day trade scanners. Just I want all of them.
We want to suck that knowledge in.
Exactly. But anyway, click on one so they can see what it looks like. Like it's really neat. Okay, so it gives you the whole entire stock. As far as days, it gives you scroll down so they can see a little bit more, baby. The open bid, the market cap. If you go down below,
I have to use the restroom real quick.
Okay, it's fine. I got this.
As quick as can be, but
okay.
Yeah. I'm just gonna scoot my chair back for you, honey.
So then, in this, sorry guys, I'm not used to his mouse. Okay, so then down here in this area, it gives you all the news, which is really really neat. And then let's go back up to screeners. I want to see. So Zach, I don't see on here, I don't see anything that says options. I see day gainers, most activities, high yield bond. Let's see, let's go to daily gainers. Check that guy out. We are at the point where our day trades are back, and so I really want to get heavy into day trading. We need to get our portfolio back up. So here on this one is a list. Barchart.com, free scanner for options. Thank you. I am going to pull... Actually, you know what? I'll pull it up over here so you guys can see what it looks like. Let's see. Barchart.com. Okay, free day trial. All right, is this something that you pay for, or do you do it free, just out of curiosity? Stocks. There is option market. I'm gonna go ahead and copy and paste that link. You guys. Oh, I guess I don't need to. He has it right there. Let's see. So if we click on options, there's overview, activity, indexes, option screeners. Oh, it's really nice. I like this website. Okay, so let's look at American Airlines. Okay, so I like the candlesticks on this. I'm finding that candlesticks are different on all of them. And that's one thing that I really like, because that's one that makes it really clear instead of having it like the bubble ones. And then when you're looking at the stack, what are you looking for? They actually have a preset scanner specifically for unusual options activity. Let's see. Options, upcoming, bird calls, short strangle. Oh, unusual options activity. All right. Thank you, by the way. Like, this is awesome that we're conversing back and forth. It's like you're right here talking to me with it. Okay, so we can sign up for free later. So this one is through the unusual options activity. This one gave up Targa resources. So with the bar chart, after you set up screener, you will... After you set up a screener you like, they will email you the results. Oh, okay. That's really neat. But it goes through all of it. And like I said, I really like the idea of this. It'll give me more ideas, especially right now. Our show is like, we're a family in our show, and we're finally getting back to the point where like our show feels like a family again. And I want to keep this going, and the learning going. So we got I had a list going, sorry guys. I had a list going, so I was trying to find what's next on my list. Okay, so he showed me a scanner that we're looking at. I want to keep this up. Oh, it's Kitty Rups! Is this my kitty?
Yes.
Oh my goodness, this is my kitty. This kitty loves me.
She is.
Well, your kitty's kind of big.
Kitty's just really hard to pick her up. I'm like, oh my gosh, she's like a weight.
Right? So we found another website. I'll go and do it later with you.
Yeah. Okay.
But it's called barchart.com,
Cool.
and it shows unusual options activities, which is really cool. I already put the chart on there that was talking about the like buy to sell, and then somebody was talking about warrants, and so like I wanted to go over what warrants are. Okay, so warrants, a stock warrant represents the right to purchase a company's stock at a specific price and at a specific date. A stock warrant is issued directly by a company to an investor. Stock options are purchased when it's believed the price of the stock will go up or down. Stock options are generally traded between investors. Okay, so a stock warrant represents the right to purchase a company's stock at a specific... How is that different than just a regular stock?
See, I have a warrant, or it's like I have a BNTX right. And it's a warrant to buy it at a certain price offering is what it is, I believe. Like, so like, you know how we've looked at, it's got the little carrot stick and it's the BTNX rights?
Yes.
Ooh, apparently the BNTX rights expired. So what it was like, it was a lower offering price of what it was at the time. Mm-hmm. So it's like saying like, all right, like so many people can like we're gonna release this many shares at this price, at this strike price. Like this is those things where you see it where and things drop. They're like, oh, it's a $4 stock, and all of a sudden there's a big warrant release, or it's like we're gonna sell 1 million of these at $3 all of a sudden. You're like, and then it's all of a sudden it triggers people selling down to $3, right? They're like one of the like, damn it, I wish it was able to show the BTNX right that I had on the Robinhood. But what it looked like, it was you contact your broker and you say it's showing up as I have a right to buy a stock at a certain strike price. Not like, sorry, you don't use strike price, it's not an option, I guess. But at a certain price they offer it to you, But what was weird was the price that they offered it to me at was even lower than what it was at like after, because you have a certain window to purchase it at this like they give you like a month or something like that to purchase it at that price.
Okay.
And then it expires after a certain time, which mine expired. But like it got to a point where even the price that they had it at for that moment, like it was lower than what it. I'm sorry, it wasn't lower than what it was currently at in the market. So it didn't seem like it fluxed with it. So I gotta I want to learn some more about it. I think that's just mainly what I've experienced through it, and I didn't know what to really learn through it. What's that, hun?
I'm getting to something. Sorry, then I got sidetracked.
Well, yeah, a warrant is basically a call option. Okay. But with different exercise rights, specifically no set expiration date, but also a time limit on how long you must hold it before exercising it. All right, so it has a minimum hold time included, is what that is. See, like, what in the hell was the BNTX rights? It showed me it had a little, like, we're just gonna refresh our, hit the reset and learn from here, guys.
Well, there was something, this is actually what made me think of it. Somebody had actually posted it. Chris, I hope I don't say your name wrong, Iliano. He said, not sure if this is the board to ask, but I'm on a warrant hunt. I just started understanding that there's a pretty decent relationship between warrants and SPACs. I'm in 5 at the moment. I plan to hold on to these past the exercise date simply because the more the stock goes up, the better value to me. My question is how do I research the exercise date? I've been able to find the strike price and expiration date pretty easily, but I'm struggling to find when they can be exercised. I'm better than a novice at research, but this one has to be frustrating. Okay, and so there was information, and one of them actually was from Zach, who's on here right now, and he said you need to research. There are 8,000 paperwork filed with the SEC. There's also clauses that lets the company buy them back from you if not exercised by a certain date. Also, like DPHCW, I believe the attached warrants are only a third of the warrant, meaning you need 3 shares to equal 1 warrant. It takes a lot of reading to figure out which company has them set up. And then there was another one that was talking about warrants, and I think it's this one where it gave me, okay, it depends on if they're full warrants or not. If it's a full warrant, you'll add the 1150. Okay. If you exercise warrants, they will cost you an extra $11.50 a share, but you can sell them at 52.19, making the 1969 profit. I felt like there was something on there. To the warrants cost and subtract that result. Oh, from the common stock market price. If you have a positive number, that'll be the number you make for exercising the warrant and selling the stock immediately. If negative, you'll lose money. BNTX was a ripoff warrant. I also got that offer. They wanted you to pay more for the warrant than the stock was worth. And that doesn't make any sense whatsoever.
See, that's what I thought. Okay, I also got that offer. They wanted you to pay more than... Yeah, that's what... Okay, so I did perceive that. I'm like, I had this, but then I did the math, and I'm like, what in the hell? Okay, alright, so I perceived that correctly. Let's see. You have like a good roll going on. I just had SEC pulled up on the side. SEC pulled up on the side, seeing if there's anything...
That is all I had actually for that so far. And then, I wanted to, I'm really sad because I tried to contact Philomena and Leanna, and unfortunately they must be busy because they didn't respond, but I wanted to go over options with them because I know it was something they really wanted to learn. And so I don't know how to do it, but I wanted to see about doing a, like watching the video with them, but to where we can pause it if we need to. Would that be a watch party, or what would that be?
Watch party is if there's something else streaming, and then, but like you would stream yourself and then just watch whatever video and you could all watch it.
Okay, yeah, let's. I want to do something like that because I want to go over options. Like I want to understand. Like I want to make sure we're doing this right.
So I saw this under Glue Mobile. Glue is one of the gaming, app things that they have on there. I'm trying to just understand if this is selling or buying more stock, but I think it's them selling because, like, I'm pretty sure as of that Thursday, Friday, it must have been a whole lot of that. Yeah, this was all Thursday, Friday stuff. I'm pretty, sales records. This is people selling their Thursday, Friday stocks while it was happening. But then again, like Beyond Meat, even Beyond Meat did its thing. Beyond Meat sales.
I don't know about you guys, but I've already learned a lot today, and like I feel like really good with the little bit that I have.
No. As far as jumping on for a day where there was no market, we have like learned quite a bit right here.
Verinder, how you doing, Verinder?
We have Verinder out there? Where's it showing?
He liked the stream. I saw that before he said hello. He always says hello.
Good. What up, man? All right, yeah. So just did a little brush up, kind of just seeing what there's around. Always reminding people to check out the SEC site and check out what you can scanner wise. We looked at Yahoo, and what was the other one? Something bar. What was that one?
Barchart.com.
Barchart.com. Yeah, we looked at that. But yeah, guys, let's see what we got. I suggest starting safe with options, research the wheel strategy, or selling covered calls. See, very good, Jaska. Let's see, but yes, no, I really want to start with options and whatnot. I probably would have been failing that one on XBot for a minute here, but it should, goddamn, get a nice long option on that one, at least another 2 months, because, but Apple, Tesla, Amazon, goodness gracious, I can't wait to see what's going to go on here. Like, it's mainly going to be lined up to sell on the mountaintops tomorrow, which would be pretty, like, I believe Tesla at least touch like certain heights, same with Apple. But yeah.
I remember what I was saying. I got kind of sidetracked when I was in the middle of a statement, and I forgot where I was. I get a little bit of anxiety, guys, especially when I'm on my own, just so you know. Like, that's why I kind of, like, stop in my tracks. Like,
when you were by yourself, you were rocking
hard.
I enjoyed watching.
But I was in mid-sentence about our group, like, being like a family, and, like, it used to be a lot bigger. Like, we used to get about 3,000 views, and now we're a lot lower. And with that, unfortunately, that means that the chat goes down a little bit. And that was one of the reasons why I also wanted to do the scanner, was because with less people, there's less ideas as well.
Oh, so
and I wanted to have a broader scope.
Us putting more into it.
Yeah, like I wanted to put in more to the group. That way there were just more options.
Yeah.
Like investing.
As an example, I will buy 100 shares of a stock like Riot at $3.25 a share, then sell call at $4 strike.
Sell one call.
So meaning if exercise, you will get $4 a share plus the premium you collect was selling the call. See, that's where the real money lays. It's the premiums and things like that, selling it with the time left.
I do have a question about let's see, as an example, I'll buy.
Oh, by the way, guys, don't forget fantasy football. If you're interested, put it down in the comments. We have a page out there.
And it needs to be filled in the next couple of days. I think Friday. They need 3 more spots filled, guys.
3 more spots filled for fantasy football. If you're interested in fantasy football, reach out. They have a group. That is right, guys. Well, sorry, not a group, a page. StockTalk2020 Fantasy Football Family League. If you don't know anything about it, get to know stuff about it.
I get my whole cleavage line. Sorry, guys.
Woo! Let's see. The cat today.
Oh, they're fighting in the back. We didn't even know they were there. I'm so glad you said that.
Good catch. Good catch. Oh, they doing their thing.
That's why we get distracted with them, guys. See how damn cute they are? Mm-hmm. Little suckers.
It's easy to get distracted by these guys. All day. Oh.
Yeah.
Oh, yeah. All right. Did you enjoy today's stream?
I did, but
what do we got?
Did you want to do an options video or?
Oh, an options video. Watch one real quick.
Mm-hmm.
All right. What do you have in mind?
I just was gonna YouTube options.
How long of a video are we thinking?
Let's see what they got.
Okay, hey, there's us.
Hi!
Oh yeah, by the way, guys, we are on YouTube now. So if you have YouTube, go ahead and subscribe. You can listen to us as if we were a podcast over there. Let's see. Now, where are we going with here? Options. Trading.
For beginners. Oh, there was a for beginners.
Ooh, is there a for dummies section?
I hope so, because that's me.
Here we go.
Welcome to Project Option. My name is Chris, and today we're going to cover Options Trading 101. So I know firsthand that options can be very confusing when first learning about them. So in this video, I'm going to teach you what options are and how to think about them so that they make sense to you.
How long is the video?
Now, the first concept that you need to understand before we move on
20
to more
minutes.
specific details is that options are traded against specific stocks. So when we talk about options, we have to talk about the options of a specific stock. So for instance, Apple and Tesla both have their own options that traders use to try and profit from the future stock price movements in those specific stocks. Now, unlike stocks, which are just shares of stock that are bought and sold, options have unique characteristics that we need to talk about before we get into the rest of this video. Otherwise, nothing's going to make any sense. So first and foremost, every option has an expiration date, which is the date that the option's final value is determined and the option can no longer be traded. Now, most stocks will have options that are expiring anywhere from a few days away to up to 2 years away. Now, the next unique characteristic of options is called a strike price, which is the price at which shares will be bought or sold if the option buyer exercises that option. Now, I know this is confusing, but stay with me because everything is going to make complete sense in a couple minutes. Now, the last characteristic that...
So all the prices fluctuate. Does the strike price fluctuate?
Yeah.
Okay.
Oh, wait. Strike price?
Yes.
No. Strike price is what it needs to reach. But what will fluctuate is the price you have to buy it at. Strike price stays, but the price you pay per stock, that's what changes price.
You're correct. It does not change. Okay, perfect. Keep going. Oh, and it's always times 100.
Is called an option contract multiplier, which in the simplest terms is the number of shares that the option contract can be converted into if that option is exercised. Now, for the most part, most options will have an option contract multiplier of 100, which means that the option can be converted into 100 shares of stock if it is exercised. Now, at this point, you're probably wondering, if options are so complicated, then why do people trade them, and what's the benefit of trading options instead of just shares of stock? Now, probably the biggest appeal of trading options is that they can leverage your returns relative to a simple stock trade. So let's go ahead and compare a hypothetical stock trade and an option trade to illustrate this point. So let's say we buy 4 shares of a stock for $150 a share and sell them 30 days later for $160 a share. Now, of course, this is hypothetical, but the profit on that trade would be $40 since we bought 4 shares of stock and they increased by $10 per share. Now, a $40 profit on a $600 investment is a 6.7% return. So let's compare that to a hypothetical option trade. So let's say we bought the 30-day 150 call option for $5, and with the stock price at $160 30 days later, we sold that call option for $10.
I think there's...
Now, the profit on that trade, $500, because the option price increased 5.
There we go. Okay, so stock trade, if you buy 4 shares for $150, sell 30 days later for $160, profit $40, 6.7% return, profit $50, $600 investment. With option trades, buy the 30-day 150 call for $5, sell for $10 in 30 days, stock $500 investment. Oh, so you pay less for it, and you get... Okay. That's the way to look at it.
Yeah, that's right. Once a stock trade, I would not think of holding something for 30 days for a $40 profit. But yes, holding something for 30 days for a $100 return profit here. Option trade, buy the 30-day 150 call for $5, sell for $10 in 30 days because it goes up $10.
Okay, so push play, let's go.
$5 from where we purchased it. Now remember, a standard option contract has a contract multiplier of 100, so that $5 increase in the option price actually represents a $500 profit. Now, since we paid $500 for that option and we sold it for $1,000, our return is 100%. So clearly you can see that by trading an option, you can leverage your returns immensely relative to just a simple stock trade. Now, unfortunately, it's not all good news when trading options, because if the stock price had stayed right at $150 over that 30-day period, then the trader would have lost the entire $500 investment in that option. So now that you've seen the power of options and why they can be so appealing, we need to get you up to speed on the essential concepts that you need to understand before actually starting to trade options. Now stay with me because we're going to go in depth and explain both of the option types. So the first option type is a call option. Now a call option gives buyers the right to buy 100 shares of stock per contract at the option strike price before the option expires. So let's go ahead and look at some examples of call options and strike prices. So if a call option has a strike price of 100, that means that the call buyer has the right to buy 100 shares of stock for $100 a share before the call expires. At $110 being the strike price, the call buyer has the right to buy 100 shares of stock for $110 a share before the option expires. And at $120, the call buyer has the right to buy 100 shares of stock for $120 a share before the call expires if they so choose to. Now logically, it would make sense that buying shares at lower prices would be more favorable to buying shares at higher prices. So why not buy the call option with the lowest strike price? Well, the answer is that calls at lower strike prices cost more money for two reasons. The first being that there's more value in the ability to buy shares at lower prices, which is the strike price of the call. And the second reason is that calls at lower strike prices have a higher probability of being valuable at expiration. So if we go back and look at the option prices at each strike, let's say the stock price is currently at $100 and we look at the call option with the strike price of $100. That option might be worth $3.50 and the call with the strike price of $110 might be worth 63 cents, while the call at the strike price of $120 might be worth 6 cents. So let's go over a more specific call option trade example so you can better understand how the position would work out in certain scenarios. So let's say we have a stock and the price is currently at $50. And let's say a trader's prediction is that the share price will increase to $60 in 2 months. Now the hypothetical option trade would be to buy the 50 call that expires in 60 days, and let's say we buy that call for $5. Now, based on the stock price in 60 days, let's look at the P&L of that position. Now, if the company goes out of business and the stock price is $0 in 60 days, then the P&L of that call option would be a $500 loss. Now that's because that call option would expire worthless since the stock price is below the call's strike price at expiration. Now let's say the stock price didn't move at all and it was still at $50 in 60 days. In that case, we would still lose $500 because at $50 per share, that 50 call option does not have any value because the stock price is not above that call's strike price. So again, we would lose $500 if the stock price did not move over that 60-day period. Now, if the stock price increased to $55 and was at $55 at the time of that call's expiration, then we would not have a profit or loss on the trade because the call option would be worth $5. And since we purchased it for $5, there would not be a profit or loss on that position. Now, that call option would be worth $5 because with the stock price at $55, that call option has the ability to buy shares $5 below the current stock price, which explains why the call option is worth $5. Now, if the stock price were to rise to $60 over that 60-day period, the profit on that call option would be $500 because that call would be worth $10. Now, the call would be worth $10 because the strike price is $50 and the stock price is at $60, which means that call option has the ability to buy shares $10 below the current market price, and that explains exactly why the call option is worth $10. Now remember, since that option contract multiplier is 100, the $5 increase in the option price from $5 to $10 equates to a profit of $500 per call contract. And finally, if the stock price were to increase to $65, that 50 call would be worth $15, which would represent a profit of $1,000 per call contract. Now, just to hammer home this concept one last time, that 50 call option would be worth $15 with the stock price at $65 because with the stock price at $65, that 50 call option has the ability to buy shares $15 lower than the current market price, which explains why the call option.
Okay, so stupid question. Like, which numbers are you actually seeing on here? Like when you're actually purchasing it? Like, are you seeing all these numbers or he's just telling you what they are? Because my question is what if you're like, all right, I'm going to choose like 65, hypothetically, right? Mm-hmm. What if it goes to 90? Or past
Damn. That's big money.
Oh, okay. So if it goes above it, it's fine.
Anything above it starts going exponential.
Okay, I understand now. And if it goes below it, you're losing, correct?
Yeah, you would lose. Well, below strike price at all.
Mm-hmm.
By the time it expires.
Mm-hmm.
Yeah, I think you would lose what you were hoping it could be capable of going. Like, cause like, what is it? Once 55, he thought it was going to go to the 50 calls. It went to 60, but it didn't go anywhere. It stayed at 50. It went up $5 and it stayed worthless. So it didn't hit his strike price of 65. It went to 55 and it's worthless. It didn't hit it at 60, but it still made it. Oh, because he said it was 60. So 65, he made quite. That's why we're going $5 over. He made twice as much. See? Remember you said like, oh, if it hits the strike price at 60, he's saying it'll hit 60, right?
Okay.
2 times. But if it went up to 65, it would be twice as much.
Oh, okay. So I guess I had it in my head for some reason, like that you had to like call the exact number.
But remember, you're saying the call is worth $5 extra though, because
but maybe the way I saw it in my head was that you were saying like, oh, it will be at $65 even by this date. That's why I was like, how in the world could somebody get that good? But it has to hit it or above, and you make money.
Yeah, exactly. It's all just about being close to it. It's like, yeah, it's all proportionate to how close it is. Right.
Option is worth.
And Daryl, that's not what my boyfriend said.
What?
Now, when we compare buying the call option to
You're
buying
right.
100
Don't say
shares
anything.
of stock, we can see that when the stock price
How bad?
decreases
Oh,
significantly,
good.
the loss on the shares is far more significant than the loss on the call option. However, if the stock price stays the same and does not increase, we'll have some losses on that call option, whereas the stock position won't have any losses at all. Now, when the stock price increases significantly, we can see that the P&L on the stock position is actually a little bit higher than the call option's profitability, but in terms of return on investment, you'll have a far greater percentage return on investment when you look at the call option compared to that stock position. And that's because to buy 100 shares of a $50 stock, you have to put up $5,000, whereas in this example,
So you
you
do
only need
get
$500
more, but are you really
to get
getting that
similar
much more
profitability.
per? Probably
So that's
by
an
a
example
bit,
of how
but
buying a call
not as
option can
much
work
as it
out.
probably
But
looks
call options
like.
can also be sold, which turns the position into a bearish trade. So let's go ahead and look at an example to see what that might look like. So let's say we're looking at a stock that's trading around $100, and we go ahead and sell the call option with a strike price of $110, and we collect $5 for that option. Now, if after selling that call option, the stock price trades sideways, decreases, or even increases slightly, the position will work out favorably because that call option will expire worthless as long as the stock price is below the strike price of $110 at expiration. However, if the stock price increases significantly, then selling that call option could turn out to be a very dangerous play because there's no limit to how much a stock's price can increase, and therefore there's theoretically unlimited loss potential when selling call options. So let's go ahead and look at the hypothetical profit and loss of this position based on various stock prices at the time of expiration. So if the stock price ended up increasing to $200 per share, which would be a monstrous move, the loss from selling that call would be $8,500 per call contract. Now that's because with the stock price at $200, that 110 call is going to be worth $90 because it has the ability to buy shares of stock $90 below the stock price. And since we sold it for $5, that means we would have a loss of $85 per call contract. And with the option contract multiplier of 100, the loss would be $8,500 per call that was sold. Now, if the stock price was right at $115 per share at expiration, there would be no profit or loss on that call position because since we sold the call option for $5, the call option would be worth $5 if the stock price was at $115 because, as you know, with the stock price at $115, there's $5 of value in being able to buy shares of stock $5 below the current market price. Now, of course, if the stock price is at or below the strike price of $110 at expiration, then that 110 call will not have any value and it will be worth $0 or worthless at expiration. Now, of course, if you sell an option for $5 and it expires worthless, then your profit will be $5 per option contract, which in actual profit terms is $500 because of that $100 contract multiplier that we talked about earlier. So now that we've talked extensively about call options, it's time to get into the second option type, which is a put option. Now, a put option is basically the exact opposite of a call option.
Ooh,
because
sir,
a
thank you
put
for liking the
option
stream.
gives the buyer the right to sell 100 shares of stock per put contract at the put's strike price before the put expires. So for example, if we have a put with a strike price of $75, that option holder has the right to sell 100 shares of stock per put for $75 a share before the put expires. Now, if you buy a put with a strike price of $80, you have a right to sell 100 shares of stock per put for $80 a share before the put expires. And if you buy a put with a strike price of $85, you have the right to sell 100 shares of stock per put for $85 a share before the put expires. Now, as you might have guessed, this is exactly the opposite of call options, because put options gain value when the stock price falls, as the ability to sell shares at the put's strike price becomes more and more valuable as the share price decreases. So with put options, as the stock price decreases, the put options value will increase. So to illustrate why this makes sense, let's go ahead and look at an example. So let's say we have a put option with a strike price of $85. If the stock price is at $80, the 85 put will be worth at least $5 because the ability to sell shares $5 above the current market price is worth $5 per share. However, if the stock price decreases from $80 to, let's say, $70, then that 85 put will be worth at least $15 because the ability to sell shares of stock $15 higher than the current market price is worth $15 per share at a minimum. So as we did with call options, let's go through a trade example, and this time we'll use put options. So let's say the stock price is currently at $200, and let's say the trader's prediction is that the stock price is going to fall to $190 per share sometime over the next 30 days. So the trade we're going to look at is buying the 200 put that expires in 30 days, and we're paying $6.50 for that put. So based on this trade, let's go and look at the P&L of the put position based on various stock prices 30 days later. So in the first scenario, let's say the stock price increases to $250 in 30 days, quite opposite of the trader's prediction. In this scenario, the put P&L would be a loss of $650 per put contract because that put option would expire worthless, and since it was purchased for $6.50, the loss on that option contract is $6.50 times that $100 contract multiplier, which comes out to a loss of $650. Now remember, that put is worthless because with the stock price at $250, there's no value in being able to sell shares at $200. Now if the stock price stayed the same and was right at $200 30 days later, we would also lose $650 because there's no value in using that put option to sell shares of stock for $200 a share since the share price is already at $200 a share. So in that case, there's no value in the option and therefore it will expire worthless. Now, if the stock price decreased by $5 to $195 per share over that 30-day period, then the put option with a strike price of $200 would be worth $5. Now, that's because with the stock price at $195, we have $5 of value being able to sell shares of stock $5 above the current market price. But since we purchased the put for $6.50 and at expiration it was only worth $5, we would lose $150 per put contract. Now, if the stock price decreases to $190, then we would have a profit of $350 per put contract since that 200 put is going to be worth $10 and we purchased it for $6.50. Now, that put contract is going to be worth $10 because with the stock price at $190, there's $10 of value in being able to sell shares of stock $10 higher than the current stock price, which explains the put's value of $10. And lastly, if the stock price fell dramatically to $175 per share, that put would be worth $25 because there's $25 of value in being able to sell shares at $200 when the stock price is at $175. And with the put contract being worth $25, we would have a profit of $1,850 per put contract since we purchased it for $6.50 and it increased to $25. Now, just like call options, put options can also be sold, and that turns the trade into a bullish position. So let's go ahead and look at an example just to illustrate how that would work. So let's look at a stock that is currently trading at $190, and instead of buying a put, we actually sell the 170 put, and we collect $7 for selling that put. Now, it doesn't matter if the stock price trades sideways, increases, or even decreases slightly. At expiration, if the stock price is above that strike price of $170, that 170 put is going to expire worthless, in which case we will make $700. Now, with that being said, selling a put option is a highly risky strategy. Let's say the stock price decreased to $150. If the stock price is at $150 at expiration, that 170 put is going to be worth $20. Now, since we sold it for $7 and it rises to $20, the loss would be $1,300 per put contract. Now, we've covered a ton of content in this video, so let's go ahead and recap what we've learned so far. So let's start with call options. Now, when you buy a call option, that gives you the right to buy 100 shares per call at the strike price on or before the call's expiration date. Now, as a call buyer, you want the stock price to increase as much as possible above the call's strike price, as the call's ability to buy shares at a discount to the current share price will become more and more valuable as the stock price increases. Now, if you sell a call option, that actually gives you the obligation to sell 100 shares of stock per call contract at the strike price if a call buyer exercises and you are assigned. Now, I know we didn't talk about that in this video, but we did a full playlist on options trading basics, and one of those videos is on exercise and assignment, which dives deep into exercise and assignment and teaches you everything you need to know about those two concepts. Now, I highly suggest you click on that playlist link that is in the description, as it'll cover the most important concepts you need to know as an options trading beginner. All right, now moving on. Now, as a call seller, you want the stock price to remain below the call's strike price as time passes, as the option will expire worthless if the stock price is below the call's strike price at expiration. And as we've seen, that means you will keep 100% of the premium that you collected for selling that call option. So moving on to put options. When you buy a put option, that gives you the right to sell 100 shares of stock per put at the strike price on or before the put's expiration date. Now, as a put buyer, you want the stock price to decrease as much as possible below the put strike price, as the put's ability to sell shares at a premium to the current share price will become more and more valuable. So the further that stock price sinks below that put strike price, the more valuable that put option will be, which as a put buyer means that you'll generate more and more profits as that stock price decreases. Now, as a put seller, you actually have the obligation to buy 100 shares of stock per put at the strike price if a put buyer exercises and you are assigned. Now, lastly, as a put seller, you want the stock price to remain above the put strike price as time passes, as the option will expire worthless if that stock price is above the put strike price at expiration. And if that's the case, then you will keep 100% of the option premium collected for selling that put option. By the way, if you're brand new to the channel, please go ahead and click the subscribe button and go ahead and click the bell so you get notifications every time we release a new options trading video. Well, that's going to do it for this video, everybody. Be sure to subscribe if you like our channel, and click on these video links featured on this page if you want.
Hey guys, all right, so that was Project Option. All right, guys, so shout out to that Project Option over there on YouTube. If you go over there and you liked what you watched, go ahead and subscribe to him. Let him know that we sent you over and share with him who we are. But yes, guys, Project Option put that together pretty well. I like that. You know, he's got the good graphics and all that jazz, so that looked great. I enjoyed it. And what's going on? I'll swear after that.
It's a homemade e-juice.
I heard about some good jokes up in the chat there. Let's see. I'm a happy member. We can pay. There we go. All right, guys.
No confirming or denying.
All right. Okay, guys. I think. Oh, by the way, reminder: fantasy football still has some room.
Yep.
And
today's Monday.
And so, what do we do on Mondays?
Our raffle away.
Ooh,
I have the.
That's right, guys.
Raffle winner.
All right, who's our winner
Are
today?
we ready?
We are ready. You can start that drum already.
It is Viet Lou.
Viet Lou?
Vietlu.
You winner. Let's go ahead and get Vietlu tagged in here if we can. If not, we're going to get you tagged over the group. Vietlu, you are our Amazon $25 gift card winner this week. Thank you so much for being part of our family, sharing or submitting stars. So that is what helps get you into those giveaways. If you have not gotten into the giveaway yet, all you have to do is be part of the Stock family by following the page and sharing the videos, and even submitting stars gets you into the raffles, guys. So thank you so much for being part of the Stock family and sticking with us all week long and getting ready for a new green week to start up. This was Labor Day. No stock market open today, but we have it tomorrow to look forward to, guys. So I hope you all get your rest, because it's going to be bright and early tomorrow, 5:30 a.m. Pacific Standard Time, guys. I hope to see you guys there.
See you tomorrow.
Do it! Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow. So just do it! Make your dreams come true! Just do it! Some people dream of success while you're gonna wake up and work hard at it. Nothing is impossible. You should get to the point where anyone else would quit, and you're not gonna stop there. No, what are you waiting for? Do it! Just do it! Yes, you can! Just do it! If you're tired of starting over, stop giving up.